that they're a set of indicators that, based upon using typical prices, you can use to get trading clues about what might happen in the future. We're going to cut this time down all the way down to, we said have a 2-year chart. Cut that all the way back to, let's go down to 3 months. That gives you a little bit better picture. Maybe let's go to a 6-month chart here, because it kind of shows you a little bit more about the impact of the moving average. On the top, where the prices are here, you can see the candles that I have. I like to use candles, give me some clues about tops, especially if they're doji tops or whatever. Then you have the predicted medium-term moving average. That is the blue line that you see. And you have the actual moving average, the medium-term moving average. That's the black line that you see there. And you have the crossover situations here, where you have the blue line crossing over the black line, suggesting a short position, and there are other clues along the way where this moving average starts to turn and starts to cross over. It gives you kind of an overview of what's going on in the market, where you'll see some places where the market will trend sideways for a period of time, but there is a tendency here. It starts to swing. The blue line, as you'll see right here, starts to swing, starts to move a little earlier than the black line, and when it crosses above there, you know that this is a good time for a long situation. Now you have to manage your trades and do some stops, which we'll talk about in a minute, but here is a situation where you potentially would be able to go long once you see that crossover. Now, going with that, you have some indicators at the bottom here that show you, more clues about what the market might do. The first is the predicted Neuro Index. This is the gray line that you see here. It is a indicator that compares 2 3-day moving averages to each other and forecast whether the typical price will be higher in 2 days than it is today. That's one that, if you have a crossover situation like this to the upside, you like that to be at 1, which is bullish. If it's going to be bearish, it'll be at 0, which is down here on the bottom. It's either bearish, it's bullish. It's either long, it's short. There is no in between. It's 1 or 0, so it's a fairly indicator that's fairly clear about what the direction is. The second set of indicators that I have here, you'll see, are the blue and the green lines on the bottom. These are the predicted differences. And when I say predicted differences, what they are comparing is the difference between a predicted moving average and an actual moving average. Green line is for the long-term moving averages. The blue line is for the medium-term moving averages. One of the key points that you have here is where you have the crossover situation where the market starts to turn down. Essentially what that means is that the uptrend that was developing at this particular point, it was going up, is starting to lose steam. It's a momentum indicator as much as anything. And you want the angle of the predicted difference to be in the same direction as the angle of the predicted moving average. When that starts to turn, you know that something has happened to the momentum of the market, and it's starting to change from what it was before. So a good indicator that you want to have that ties in with some of the other indicators. The one indicator that I like to use, probably more so than what I have started out with, that I worked with it more, and that is the predicted high and low. Now we're going to cut back to our 3-month chart, because otherwise we have a lot of things here. It's pretty hard to see. The predicted high and the predicted low, the gold line that you see there is the predicted high. The pink line is the predicted low for a day. And I'm going to switch over here to a chart, and we're going to do a little, basically take a picture of this chart, and we're going to talk about it a little bit more as to how it can be used. We're making the switch. As I said before, we are not talking about a trading system. We are not talking about anything that doesn't involve a combination of indicators. It also should be kept in mind that you should be thinking about other typical technical analysis indicators, such as I say, like the trend lines and so forth. But This is your action type of a screen where you can count on something going on that you can say, well, okay, if this is the indication that I have here, I can expect something to happen, either a trend change or something that could happen that would be most noteworthy. Now, when I look at this particular chart, as I mentioned before, I want to come back to the indicators. I look at things like the crossover, the predicted difference crossover. I want that, if it's going down, I want it to line up. As you can see right here, we have a situation where it lines up pretty much with the market that is topping, and this one is turning down, and we have a situation right here where it goes down and then it goes flat. All of these indications suggest, in this case, that this market isn't going anywhere. And as you can see with the E-mini, it has been pretty flat. Been a fairly tough one to trade unless you're trading on a short-term basis, maybe intraday as an active trader. But it's the type of market that has been a little bit difficult to trade recently. I'm going to skip through some of the other markets. We're going to apply. What we're going to do now is we're going to apply all the charts, the indicators. We should look at some of the other markets, and we're going to go back to switch back to my screen, and we're going to talk about it a little bit. Okay. Coming back to my vantage point charts, so you can see what we're talking about here. We're going to kind of skip through some of the markets here, and as I said before, there may be some markets that you want to look at specifically, but I'm just going to look at some of the charts and the way they look. As I mentioned, we have a situation right here. What I like to do when I look at the markets is that when I have a predicted high on a short-term basis, I like to give the market a little latitude here, and I like to trade when the market moves above a predicted high, a certain amount. In the case of the E-mini, it might be, a couple of points. I don't want to get into a situation where I'm risking a lot of money, but if I would say, 6 points, risk $300. If I would go above there, I would buy at 6 points above the predicted high, and then I would keep a stop that would be somewhere in the vicinity of right here where you see the pink line, somewhere below the predicted low. At some point, of course, you will get stopped out, which is what you intend, when the market